Gold, silver, platinum, and palladium have just gone through one of the sharpest corrections, profit-taking sell-offs we've seen in precious metals history. In this gold market commentary for Friday, January 30th, 2026, I'm going to walk you through the trading charts for the last week to show you where the peaks are, how far the sell-off went today, and the good news is where the support levels kicked in to see a bit of a bounce before the trading session ended as value bargain hunters came into the market. Hi, I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. If we can help you with any of your needs in the physical arena, we'd love to have that opportunity. Let's get on with our update. This is an article from Bloomberg today. Gold and silver plunge in wild swings that rocked the metals markets. Yeah, it was a wild trading session, one of the wildest I've ever seen in my 46 years. In our daily gold update by our esteemed Dr. Bill Musgrave, Dr. Musgrave talks about how Kevin Warsh being named as the Fed chair replacement for Jerome Powell by President Trump today might have helped to spark this sell-off because he's a bit of a hawk. But I think the most important thing to remember is one of the comments at the bottom of the daily gold update. As Dr. Musgrave wrote, after a feverish rally this month, driven by solid fundamentals and speculative froth, all four metals were ripe for a correction. The only surprise was the size, which was enormous. And it was. We'll get into that in just a second. Nonetheless, they posted huge gains for the month, with gold up 13%, silver up 43%, platinum up 33%, and palladium up 25% in January, despite today's big correction. And looking at the numbers, we've got some huge trading ranges for gold and silver, platinum and palladium just today. Gold down about 10% at $480 from yesterday's electronic close, with an extremely wide $760 range. Closing today at about $48.90. Silver dropped $30 on a $118.50 to $75.15 range, closing the New York session, electronic session today at about $86 an ounce. Platinum fell $450 on a $660 range, closing at about $2,200 today. And palladium dropped $300 on a $450 range, closing at about $17.25. The good news is, as you can see from the bottom of the range to where the close were for all these metals, they all rebounded off of oversold levels, in my opinion. And we're finding some fair value modestly higher than the lows. Meanwhile, inflation came in hotter than expected in December, and the dollar has taken a tumble this week while the 10-year Treasury yields have risen. We'll talk about that very briefly. So I would like to walk you through the four precious metals charts that I follow that are the COMEX futures contracts for gold, silver, platinum, and palladium, going about 2 weeks back into today's trading session. So you can see how we got to where we got to, both reaching the peaks and in today's big sell-off. Let's look at gold. Okay, so this is a 20-day, 1 hour chart. That oval, that dark oval, is 2 weeks ago when the metals were looking like they were getting a little toppy and might ease a little bit. And then we had that Japanese bond blowout, which is labeled, that led to the run higher. Now, as the markets moved higher, I've drawn support lines in red, two of them underneath the market. First, this basic one here, showing the bottom here to the bottom here and extended it out to right. Then as the market became a bit more aggressive in its run higher, I added a second. And then, as I always like to do, I tied in the tops as well. So we created this channel. So you can see if the markets are staying in the channel uptrend or not, whether they break over it, which they did, obviously, and took off to a peak at 56.26. And then the correction started. This is the first crack that appeared yesterday in the New York market. We had a bounce, And then we went into the Asian market and we sold down in Asia, which has been unusual, which led into a London sell-off, which led into a real sell-off in New York. Let me drill down on this a little bit tighter so you can see more closely what's happened. We'll make this 10 days and 30 minutes. And after the Japanese bond blowout really started to affect the market, we had gold break over $5,000 an ounce for the first time. Here we're testing 50.80, moved over that. We moved into this week's trading session here with gold punching all the way up to 56.26 in Asia on Thursday night. Then as we moved into the New York trading session, we had a stock breakdown and we had our first sell-off, which with gold dropping from 55 and a quarter all the way down to about 51.40 before value shopping came in, and we closed higher going into the electronic close here. And then we moved into the Asian session and we had overnight sell-off today going into London. Here's where the London market started. We had a bounce and then a big sell-off. So let's tighten this up a little bit more. This is 5 days, 5 minutes, gets you more granular. And here's that first crack that appeared yesterday. And I call this, when we see the stock sell-off and precious metal sell-off in sympathy, throwing the baby out with the bathwater. And that's typically what happens when you have a liquidity event. But this turned into just a real rout today. And let's take a look on a 1 day, 1 minute chart. This takes us to Wednesday's high on a spike, then a rounding top that just about made the same high as this previous spike. And then we started to see the market kind of sell off as we got into the New York trading session on Thursday. If we drill down on this on a 5 minute basis, here's the sell-off in New York yesterday, the run higher, the rebound, and then we get this really big sell-off here in New York today, which just multiplied on itself as time passed. So here is the electronic open leading into last night in Asia. We started to see that sell-off overnight with gold bottoming at about 5,200. Moving sideways. Then the London market opens and we had a drop down to 49.65, breaking 5,000, a rebound a little bit higher. And here's where New York opens. We had a bit of a bounce and then sell down to testing the low again at 49.30, 49.20. Another shoulder appeared and then the sell-off just ramped up and got really vicious, with the market dropping all the way down to a bottom of 4,700. And if we tighten this up, right here is where the rubber really met the road. We tested the low here at 47 and a quarter, bounced back up. And this is the two trading candles where we had a sell-off on huge volume and a buyback on huge volume, the two of them combined. And that's really where the selling pretty much almost exhausted itself and the buying really started to appear at 47.21 in the futures market. But we did get down as low as about 4,700, 47.15. We had a little bit of a rollover again, another test of the low. And then finally the bidding started to come back in and drove this market back up to 49.73 on the futures market. So we settled the day 48.50 and a top just under 5,000 as we went into the close, which is a nice bounce off of the bottom. We could see some tentative trading going into next week. Volume apparently, came way down as the market settled and digested this major correction. This is the RSI below. You can see how low it was here when the markets bottomed. And then as the buying kicked in, the relative strength increased quite a lot. And then we got more neutral as time passed through here. I think gold is actually oversold a bit. I think the market will see gold's fair value between 5,000 and 5,100 as we move into next week, early February. Now, I could be wrong, but that's what my gut instincts tell me. I am going to go out on the limb here and say I think we might see a bit of a firming in the Asian market when we reopen, and we'll see a tentative move back over 5,000 for gold towards 5,100. I do think that's where fair value is. And if we go back just one more look into the longer time frame, just 2 weeks ago, we were at about 46.50, 46.60. And we had support here at 5,000 before. We went under it, and support again here at 47.87. We broke that a bit today, but we moved back over it again. So I think that real support is in the 4,800 range, 4,750 to 4,800 range. But I do think the market will take us back into the $5,100 range based on the way I see the trend going as time passes. That's my instinct telling me that, for whatever that may be worth. Let's take a look at silver, which is more volatile. Here's the silver futures contract going back 20 days on an hour bars. And I've got a lot more lines on this chart because silver's been more volatile, and it's been more important to find where the support lines are. So again, here is the 2 weeks ago, just as we were starting to roll over a little bit, leading into the Japanese bond blowout, which saw silver gap up on the Japanese Open or the Asian Open. But then we had a ceiling right at $95 that we couldn't get over for 3 or 4 trading sessions until silver finally broke higher. And that's when I put the support line here, connecting these two dots and move this forward. And silver surged this past week and a half, trading all the way up to 117 before profit taking kicked in. This was Monday of this week. We found support at about 104, 103. We moved back over the trend line and ultimately hit a high at 121.78 before that first crack appeared yesterday in the New York session, in a very similar pattern in silver. A sell-off, a rebound going into Asia, and then just a brutal sell-off in silver today in the Asian, London, and especially in the New York sessions. Let's drill down on this. Here's a 5-minute bar, and here's that first peak that we got at 117 on Monday in New York, which sold down a bit before we reopened and moved into Asia. We tested it on Wednesday, punched over it in Asian trading on Thursday, going into London, and then we got into New York. We peaked at 121 early in New York trading, and then the sell-off started on Thursday when stocks started to break down. This is where the baby gets thrown out with the bathwater. We had a bit of a rebound going into the New York close, but then we opened up in Asia last night, and the selling really started in Asia. And we broke support. We get into the London market here, right here, and they sold off in London only to bounce back up, and we get into New York, and then the sell-off really just ramped up. So let's tighten this up. The last 2 trading sessions on these 5-minute bars, and every time we broke, we found some support. We punched up a little bit. We broke it, found new support, broke it, moved up a little bit higher, tested it again, and then broke it. Let's go to 1 minute. And this is the last trading day. And here's really where the action really started to tumble. We hit a low here of 95 where support looked like it was going to hold. We get into New York and we finally broke 95 at about 10:30 this morning in New York. And then this sell-off was just brutal. And I put little support lines here at 95 here as I watched the trading go on through the day, then again at 90, then again at, I think this is 86, 85. And then this is really where the worst of the trading action came in. And again, we had a bottom and a tug of war right here for support versus resistance, sellers versus buyers on huge volume spike between about 74 and 79. The market started to settle down. There was one more sell-off run, and then the bidding kicked in. Again, at 74, all the way up to about 84 here, 85, 86, 86 and a quarter here. And then we settle into this tighter trading range going into the close with the market firming up a bit, finishing the day in the futures contract at about 85 and a quarter. And again, I think silver is oversold at these numbers. I really think the market will see fair value for silver, $90 or higher. So I think it's a bit overdone. I tend to be a bit optimistic when we see turnovers like this, but some serious damage has been done. But I do think the market is going to kick in and we'll see some support between 85 and 90, which probably will take the market back over 90 as we move into the trading week next week. Let's look at palladium and platinum. Again, very similar pattern. Let's take this out 20 days. And there you go. We had a peak, drawdown. And this is 2 weeks ago when we had that rollover week before the Japanese bond blowout. And then as gold took off, platinum followed suit in a big move higher, all the way up to 29 and a quarter, much choppier trading leading into the sell-off in New York yesterday and then today's vicious sell-off. Let's tighten this up a bit. Here's the peak at 29 and a quarter. This is the sell-off on Monday going into Tuesday, primarily pretty sideways trading going into Wednesday. One more test run higher going into the New York Open on Thursday, getting up to about 28.15. And then this is where the first crack appeared in the New York market on Thursday. And again, on huge volume spike and very low RSI. Everyone was a seller here. All those traders were sellers. Cracked the market, breaking down just below support at 25.21. Just a little bit of a rebound going into the New York close, then the Asian Open, and then the sell-off kicked off hard. But again, we had the same kind of a bounce. Let's tighten this up. And here we are from 2,300 all the way down to a bottom at 1980 with huge volume in here. Huge volume as selling really kicked in. Some tentative support first at 2,000, then a run down to 1980. Then value shoppers kicked in, punching the price back up to ultimately a top at about 2175 here with a bottom just over 2100 and the market closing at 2178 in New York. So this is a pretty good sign, like gold and silver, same pattern, with value buyers coming in pretty strongly when we got to what I would consider a real oversold condition. Let's take a quick look at palladium. And again, a similar pattern. Let's back this out to 20 days. Here we go into the weaker week, then the Japanese bond blowout. Very similar pattern to palladium. I put the support line here and then extended it out. Hit support at 1850 and then a big run all the way up to almost 2200. But palladium started to suffer profit taking long before gold, silver, and platinum did. We had a run back up, testing the top twice yesterday, 2170, just a little bit under the previous high, but failing to break it with real tops at about 2140. And then yesterday's New York crack on the 29th, a bit of a rebound, and then it was nothing but selling today in Asia, London, and New York. And here's the last 24 hours for palladium. Again, here's huge volume here, leading to the bottom, big bottom spike, all the way down to 1572, which was about $75 down below where it was really trading before the RSI kicked up. Here's selling. This is a low RSI, moving into a higher RSI, and then the bidding brought the market back into a more fair value spot. So I do think we've got about a 1750 top, 1735 here, and a bottom right at about 1675. I do think palladium's a little oversold still. Fair value being between 1700 and 1800. For platinum, I didn't do that. We've got support for platinum right at 2100 with resistance at right 2170. I do think fair value is going to be closer to 2200 to 2350. I think that's really where platinum needs to go to find fair value. So those are the four COMEX trading charts in real time for these four precious metals over this vicious sell-off that we've seen today. But we did find some good support in an oversold condition, which I do think now will lead to some modest price gains as we move into Asia on Sunday night and into New York on Monday. I really think the worst is over. but you don't know for a few days how that will really pan out. With gold and silver taking a big tumble today, we've got the gold to silver ratio chart, which hit a bottom just 4 or 5 days ago at 46.20. With gold at 4,900 and silver at 84, punching back up to 58.33, getting more towards what I call the equilibrium point of 62.5 to 1. So we're seeing the gold to silver ratio suddenly narrow, with silver taking a bigger tumble today than gold took, which is not to be unexpected. So I still think silver is a good value, especially under $90 an ounce. I think that that's really fair value for silver, and I think we'll see it move from back into the 90, probably to $95 range. Just taking a quick look at COMEX warehouse stocks, which peaked in April of last year at 45 million ounces. They've leaked about 9 million ounces out now, down to 36 million ounces today. So nothing really to report there. In silver, we're seeing a bigger drawdown in silver due to this tightness in silver, both in London, the London Bullion Market Association, and demand for silver around the world. So the COMEX, which normally has, under 300 million ounces, got up to 531 million ounces in October at a peak. And it's down to about 408 million ounces now. So about 123 million ounces have moved out in the last 4 months alone, after peaking in October with no tariffs on silver in the U.S. So I expect to see this to draw down further towards 350 million ounces, but probably at maybe a little bit slower rate now that the froth has come out of the silver market in the short term. We got some inflation news today. The producer price index is up sharply in December, with the headline PPI up 0.5 point to 3.0% year on year. And the core producer price index, minus food and energy, up 0.7% in a month to 3.3% year on year, showing that inflation is being really pesky right at this point in time, despite the fact that I'm very happy when I go to the gas pump, because gasoline prices have been substantially lower in the last 2 months, which brings us to the dollar chart. This is a 15-month chart of the U.S. dollar index. We've seen the dollar take a big tumble in the last week of trading, breaking major support at 97.25, primarily against the Japanese yen, which is strengthened because yields have surged in Japan. It makes the yen stronger, and the dollar has a pretty significant weighting in the U.S. dollar index against the yen. So this is more of a yen move than a euro or Swiss franc or other currency moves. But still, the dollar is breaking major support, and that is potentially inflationary as well, because we import a lot of what we need, and a weaker dollar means the dollar goes less against other currencies when we're buying goods overseas, bringing them into the U.S., which helps to explain why the yield on the 10-year Treasury in red has been rising over the last couple weeks to short-term highs, while the federal funds rate has been declining. It's now at about 3.64%, with the 10-year Treasury yield at about 4.25%, and the 2-year Treasury yield rising as well. The Fed, of course, did not raise rates this week, saying that the employment section is looking pretty good, and inflation seemed to be in check, although it looks a little bit peskier than they had announced in the Fed meeting this week. Here's our getting started guide. If we can help you with any of your needs in physical precious metals, this dip is a good buying opportunity in our opinion. I think we got oversold today to a degree, and I think we'll see the markets firm up a bit cautiously as we move forward in the future. Here's what our website looks like. If we can help you, we have online, live, transparent pricing on our website. Here are our social media handles where we post in between these updates, where you can follow us. And of course, our YouTube channel. Thank you to all the people who've subscribed in the last 2 years. We're continuing to want to grow the channel, so please subscribe if you like what we're doing. And here is our contact information. So once again, this has been one of the biggest precious metals corrections we have ever seen, with a massive sell-off today, primarily in the New York market after leaking overnight in Asia and then in the London markets. But again, I think we got to an oversold condition, and we've had a nice bounce moving off of that oversold condition, with gold just under $5,000 an ounce, silver in the $85 to $86 range, platinum at about $2,200, $2,150, and palladium about $1,900. So thank you so much for your time. We'll keep you posted as these markets develop. But this is a good buying opportunity for value shoppers, I believe. I took some new positions this morning as the market sold off and then started to bounce. I like the dip that we got into myself personally. So that's what I'm doing. So thank you so much for your time. Thank you, and have a great week.